Hi guys, a very good afternoon to all of you all. Hopefully my screen is visible, right? So today also we will be discussing an ethical question which was tested in your March June 2023 exam paper. Okay. So before we start off, right, I would like to give you all a brief introduction of what is the exact requirement of the examiner, right? So normally you all know that ethics is will be tested between 6 to 12 marks, right? It will linger between 6 to 12 marks. But this term, for the very first time, right, they have broken down ethics into two parts, right? One is about a general discussion, right, where you don't need to relate it to any of the exhibits that has been given, right? And the B part, which is containing for 6 marks, you have to relate it to your specific scenario that is being given, okay? And also you will get an additional 2 marks will be rewarded for your professional uh, way of presenting your answers, right? So this would be total of 4 plus 6, 10, 10 plus 2 is a 12 mark is your total ethics, right? A general discussion and a specific discussion is required from you all, right? This is your very first requirement, right? And your final requirement, as usual, we already have gone through, right? They will include a small standard or a relevant standard. This time they have included something from IAS 38 and IAS 36, right? These have been tested in your skills level financial reporting. Okay, that is so. We start off our today's session. Okay, so you all know, right? Ethics is will be always will be tested in your as a second question, right? For 20 marks, and you will not be required till date, right? You have not been required to calculate any calculations. Okay, our financial year end is 31st December 2008. Okay, and our very first requirement would be, right? They want us to discuss. Okay, the verb is discuss for 4 marks, right? For 4 marks, they want us to discuss on the advancement of information technology. Okay. Hopefully, I'll remember the iPhone 16 was released in the recent days, right? So because of that, okay, what were the impacts? Okay, what were the impact or what is the impact for an accountant? Okay, if you all discuss generally, right, with whatever the knowledge that you all have for 4 marks, right, under 4 bullet points, you will be able to get the full marks. Okay, so I have come up with my set of answers, right? I have structured it according to my way, and this is my discussion in general, right? Which might differ from yours, right? So what I would suggest you all is you all could grab some points from mine and you all could incorporate into your answers as well. Okay, and also we have the examiner's answers also here, right? So you all could, pick in points from different sources and integrate into your answers. Okay. So what I have told is, I start off with a general point, right? What I would say is that technology is volatile, right? It changes a lot. It changes day by day, hour by hour. Okay. So because of that, our economic activity. Okay, what do I mean by economic activity? I mean the business, right? Any businesses that you all are performing will be significantly impacted. Okay, this is a general point that I normally, as a habit, I give in terms of my ethics. Okay, so now I come into as I give the an introduction on the advancement of information technology. Right now, I come into the impact of my ethical duties. Right. So as what I will start is as an ACCA member, right? As an ACCA member, we will be facing multiple issues in terms of professional competence, okay, in terms of confidentiality, in terms of economic cost, okay, right? These are the multiple issues that an accountant or an ACCA qualified member would be facing, okay, in terms of your ethics. Number one, number one, for example would be is now see Microsoft is releasing a new Excel sheet, right? With new formats, with new features, with new tools, right? And you are a CEO, you're a senior accountant of a particular company, okay? And your company has purchased that Excel sheet or that software, and you're now supposed to prepare your accounts or you're supposed to adapt your accounts to that particular software. My question to y'all is, if y'all don't know how to use it, or if y'all don't know how to use those functions that has been incorporated in that updated software, will y'all be able to perform your duties properly? Right? Will you all be able to perform your duties properly? No, right? Simply, if you all don't know how to operate a software, how to operate the updated software, or neither if you all have not taken or made any attempts to, learn that software, you all will be struggling, right? You all will not know how to copy and paste. You all will not know what's the key that you're supposed to use for formatting, or VLOOKUPs, any of that sorts, right? So that is what I have mentioned. That is what I have mentioned in terms of professional competence. When a new technology is being developed, obviously you should be competent enough, right, to handle that software. That is what I have mentioned here, right? So let me mark the important points, right? You need the particular skills or enhanced skills in order to carry out your duties with prompt care, right? Right? Suppose if you all don't have, okay, now I've told that, yeah, okay, if you all have this, you all what sort of options that you are supposed to go. But and if you all don't have, always don't try to go in one way. Try to use contradicting points, argue with the examiner. Okay, can you all see here? If you all don't know to use, right? If you all don't know to use, there will be significant errors. Okay, there will be significant errors as well as frauds. Right? With this, you all can conclude your first point. So first of all, how I answered my general discussion was I brought in the advantage, right? Or the importance of that, of me learning, of me having a professional competence. And after it, I brought the disadvantage as well, right? Told that if I don't have professional competence, what sort of errors or what sort of negative impacts will occur in my organization. That is my very first point in terms of professional competence, right? And the very second point is confidentiality. Okay, always y'all know, right? Y'all are having uh y'all are having authorized or confidential information of your shareholders, right? Y'all should not disclose this unless it is required by the legal or your government authorities, right? Now, when y'all are updating your systems, right? When y'all are updating your systems, your softwares, right? Or your processes within your organization, right? You also should make sure that the third party, or Microsoft or Teams or Zoom or Gmail, any of them, right? They should not have access to your client's information, client's personal information. They should not have, or they should not have any information in terms of your financial statements, right? Because those are entity oriented, those are customer based, right? We would not disclose them unless it is required by the government or any legal authority, right? So you all should, whenever you all are updating or whenever you all are enhancing your technological updates, right? You all should deal with specific and due care, right? Because you all are dealing with something known as customer information, which is highly confidential. Okay. So here it is. When technology changes, this will be needed to be integrated within the system. Okay, fine. Okay. As an accountant, we must ensure that active firewall and encryptions, obviously, right? You should not let any data theft or data loss being in your organization are placed. So even though we upgrade a new system, nothing will be hacked or data is not lost. Okay. This you also include in your answer. Okay. You also mainly speak about data theft, data loss, or data damage, or any of that sort. Okay. Finally, is my very last point, right? I would finish it off with, I would conclude my answer with something known as my economic cost, right? Always you all should make sure, right? You all should make sure you all know something known as uh, cost benefit analysis, right? Cost benefit analysis. Cost benefit analysis is, right? You all should know something known as cost benefit analysis. You all would have studied. Okay. What is cost benefit analysis? The benefits, right? The benefits must be greater than your cost incurred. Okay. Now say that this particular software, this enhanced software is about 500,000 LKR. Okay, 500,000 LKR or USD. Okay. And the benefit that you're getting would be for 800,000, right? This would be recommended by the organization. Why? Your benefit is higher than your cost. Okay. But in case if your cost was 500,000 and if you're only able to benefit for about 200,000, obviously there is no point of implementing that new software, right? Because you're at a loss. So that is what I have spoken in terms of my economic cost, right? These are sophisticated systems, advanced systems, right? Advanced systems can normally be at higher cost, right? During the implementation stage, right? Therefore, an accountant must ensure that a cost benefit analysis is done so that there is a development in the process, right? So that you could see some economic benefits in the process or in your business rather than setting a drawback in the process. Okay, that is what I have mentioned here also. Right? Earlier, you all were using X system. You all were only able to produce 100 vehicles per minute or per hour. Right? Now you all have upgraded your systems. Right? When you all are upgrading your systems, you all are able to produce now 200 units or 200 vehicles per minute. Right? So this is an advantage, right? So this is all that you all need to speak in terms of your economic advancement or your technological advancement and the impact in terms of ethical issues, right? Is all you all need to speak. Okay. If you are wanting, you all could go, right? You all don't need to look into my answers as well. You all could go and look at the examiner's answers, grab these points from him and mine as well, collaborate them, and produce or write something which you all feel you all are comfortable with. Okay. Hopefully that is understood. Hopefully that is understood. Let us move on into our second requirement, which is a 6-mark question, right? Which is a 6 marks question. Right, what do they want us to do is they want us to discuss again, right? This time they want us to discuss about the ethical issues. Okay, now you all have to be specific, right? They want you all to speak the ethical issues about the accountant and the internal auditor only, right? You all only need to speak the ethical issues that is being faced by the accountant and the internal auditor. Okay, and any actions, right? This is any actions means they want you all to recommend, right? They want you all to recommend. They want y'all to recommend how you all will mitigate or how you all will reduce these kind of ethical issues within your organization, which is herding co, right? If I'll discuss that for 6 marks, you all will be able to get that entire full mark. Okay. As usual, right? What I would do is I would go and take a screenshot of my examiner's marking scheme and I would look into what or how my marks will be allocated. All right. And as you all know, right, since I need the professional marks, I need to use the relevant points and I need to use certain type of headings, right? Certain type of headings, and I need to break them and show how is it being affected for my accountant as well as for my internal auditor, right? If I do that, I will be able to grab that additional 2 marks, which is given for my professional. Okay. So here, see, I have broken down into 2 parts, which is I have split it across accountant and internal auditor, as well as I have broken down those ethical issues and I am relating it to the scenario given. Okay. And I am justifying them. So if I do that, I'll be able to get 1 mark for each. Okay. That is so for this, I would need to read you all the exhibit, right? Which would be here it is. Here it is. On first in 2008, right? In 2008, you all upgraded your computerized systems. Okay. And you all have been using a centralized. Centralized means all the divisions. You all can have multiple divisions across your industry, and all those divisions will be using one system for purchasing, right? It's not like division A has its separate purchasing software and division D has its separating purchasing software, right? All of your 10 divisions might be using one particular software, which is known as centralized. Okay. It's common for all the divisions. Okay. It's common for all the divisions. All divisions of Vertigo were required to use the same. Okay. However, on 1st August, right? on 1st August, what happens is the divisional head of Cutherd Co, Mr. Bookman, right? Mr. Bookman purchased a procurement system. Okay, he has gone and purchased without authority. Okay. Now, normally, you all know when you all are working under centralized organization, any capitalized or any capitalization assets, right? Or whenever you all are purchasing any assets, you all need to get the approval from your head office, right? You all need to get your approval from the head office or headquarters, right? That is the normal process of how an organization works. But in this particular scenario, what this particular divisional head has done is he has gone and purchased a new procurement system without the authority of those head office managers, right? Without their knowledge, he has gone and purchased. And also what he has purchased is C, which is incompatible with other systems, right? And also this is incompatible means you cannot use it across any other divisions. This is only entity specific for division D, right? This is only specific to division Cutherd. Okay. So this is a huge problem. Entity specific, right? Not for centralized. Right. Now you all see the problem, right? Number one problem is Mr. Bookman, he is not going and getting authorization from the head office, right? He's just buying it because he has a power, right? He's a divisional head. Because of that, he's buying it. He's not informing his seniors, right? That's one problem. And another problem that you could face in terms of this new procurement system is it's incompatible, right? Because of that, the remaining divisions are not able to benefit. Only that particular division, which is known as Cutherd Co, is able to benefit from this, right? Now, my very first question again is, I'll again go and read the requirement. Am I supposed to speak anything about movement, right? No, right? I'm only supposed to speak the ethical issues faced by accountant, who is Mr. Brima, and Mr. Franklin, who's the internal auditor, right? I don't need to speak anything that is related to Mr. Bookman, who is the divisional head, right? Yeah, give me a minute. Okay. Sorry. So we are not required to mainly focus our answers in terms of Mr. Bookman, right? We are supposed to focus on Mr. Ebirema, who's the accountant, and the internal auditor only. Okay, but we can, incorporate him here and there. We can relate him here and there. Okay. When you all do the answers, when you all start structuring your answers, you all be able to understand. The new system is specific to Cutherd core, right? That's what I told you all, and cannot be used across other divisions. Okay. Mr. Bookman has stated that Cutherd Co will use this new system to make purchases in the future rather than the company's centralized system. See, just because you have the authority, right, and you are maintaining autonomy, it does not mean that you are supposed to go against the policy of the entire company, right? You can be a manager of a particular division, but and you are given the authority to make those decisions in terms of the division. But right, you have to make sure that your senior personals are aware of that decision, right? When the entire company is using the centralized division or a centralized procurement or centralized purchasing process, how come you are going to use something that is, deviating from the entire company's policy, right? This is totally absurd. This is totally absurd. This is totally pointless. Okay. When all the entire 10 companies are going towards one way, right? Only you're the particular person who's deviating, who's diverting from the direction that is supposed to be gone through. Okay. As a result of using the new system, here see, now you all see the impact. You all see the impact. He used it, right? Now he's getting his result. Can you see? Poor pricing strategy has resulted in unfavorable pricing decisions. Obviously, right? I guess that product would have been a failure by now. Because why? Poor purchasing strategy and unfavorable pricing decisions would have increased the cost of raw materials, would have increased the production, that would have gone and increased the what they call selling price. Because of that, your customers would not buy from your, right? Even though Cutherd division has made purchases with the new system, it is not fully operational. Here's another one. Another point is coming in, right? One, it's not incompatible, right? This is your one point. It's not incompatible, okay? And your other very point is not, it's not fully operational. When you're not able to use it in an optimal level, right? After spending thumping amounts, there is it's that product is known as useless, right? That software is useless. Okay. Okay. So now okay. So normally my way of my how I teach is I start to read a particular paragraph and I will start to write. But the main ethical issue is from this point, from this particular paragraph. So that's what I'm not able to write anything from these two paragraphs because these are related to Mr. Bookman, right? Which is irrelevant. Okay, they are only asking the impact in terms of your accountant and your internal auditor. Okay, so the accountant of holding co, Mr. Ebirama, right, is considering the impact of poor purchases. Okay, he understands that the current company is facing what you call a loss, right, because of the poor purchasing strategy. He wants to implement new financial controls, right? He wants to implement, but he does not wish to introduce controls because he may feel Mr. Bookman as excessive, right? Why he feels excessive? Obviously, Bookman is a divisional head who is above the accountant, who plays a dominant role, right? And he puts pressure. You all know when you all have unwanted pressure, when you all have unnecessary pressure, that is known as intimidation threat, right? That is known as intimidation threat. Hopefully, you all are aware of this. Intimidation threat. Intimidation threat is, for example, I'm harassing you, or I'm bullying you, or I'm threatening you, right? Saying that if you don't perform this work, I'm going to sack you off, right? Or I'm going to de-promote you from an accountant to a senior executive, right? That is what I feel Mr. Bookman is doing, right? Because of his higher authority. Okay. So now this part is relevant to the accountant. Let us start writing it. Let us start writing, right? So first of all, I would categorize it as a Birama who's an accountant and internal auditor. And after now, I'm going to speak about the threat that is being faced by the accountant. Okay. He's facing intimidation threat. Okay. He's facing something known as the intimidation threat. Okay. So out of this, what would I give as key points? What would I give as key points? So one of the key points that I would give is obviously he knows that there is a pressure, right? There is an excess pressure that is being given by your seniors, right? It's being given by your seniors. Right? And excessive pressure is being applied by your senior, who's Mr. Bookman, right? And because of that, he does not want to introduce the new control. Why? He wants to be in the good books. Why? He wants to be in the good books of Mr. Bookman, right? Okay. This is what the problem they are facing. This is what the problem they are facing. However, the ideal solution for this needs to be disclosed to the management, right? You all need, now you all are accountants, right? If your company is at a loss because of this poor purchasing strategy, you all need to disclose this to the management. And also you all need to disclose to the management about the additional pressure that is being given by Mr. Bookman, right? You all need to disclose. Otherwise, you all will not be able to work in that company for about another 6 or 8 months or 1 year or 2 years, right? Why? Because of that additional pressure, you all be starting to get demotivated and you all will not focus. Your quality of work will drop, right? So you all need to, the more you all disclose it to the management, the better for both the sides, right? The company and you, right? Since he was able to purchase and implement this new system, right, without their prior authorization. Okay. This you need to speak about. This you need to speak about. Because if you get scared and if you omit this from the management at the day of the inquiry, whenever the managers of the senior management finds it out, right, you were also involved in this, your name is also at stake, right? Your job position is at risk. So that would be the justification in terms of my intimidation threat, right? And also the examiner wants us to give action points, right? He wants us to give action points. Here it is. You see, any recommended actions he wants us to give. So what you all need to do is, here see, they must report it to the relevant parties, right? I want them to report it to relevant parties, right? And push Mr. Bookman. And if not possible, they must resign as a last resort, right? Either you report, right? You report it to the management, say that Mr. Bookman is giving additional pressure, or you can speak to ACCA, right? ACCA for ethical guidelines, right? And if ACCA is also not able to respond to you all for the threat that you all are facing, right? As a last resort, you all need to resort. Sorry, as a last resort, you all need to resign, right? You all spoke to the management, they did not help you all. You all spoke to the ACCA, they also did not help you all. So what is the last option that you all are left out with? You all need to resign, right? You all need to simply resign from that particular position. Okay, that is one point. See, that is 1 point. 1 point is for my justification, and 1 mark will be given for my action, right? So I will be able to grab here within 1 to 2 marks, right? 1 to 2 marks. Okay. Now, Mr. Bookman, right? Mr. Bookman is also part of the management committee, right? He's also part of the management committee to whom the internal auditor would report, right? To whom the internal auditor would report. Okay. You all know internal auditors need to have high independence, right? You all need to know that your internal auditors need to have a high level of independence, right? If they don't have independence, they will not be able to do their work properly, right? What is their work? What is one of the responsibilities of work or job role? Is they are supposed to find out any issues in their internal controls, right? Since they are internal auditors, you would have studied in audit, right? Internal auditors, one of the main job roles is to identify any inefficiencies in their internal controls, and uh, they need to give ideal solutions of how to overcome that inefficiencies, right? So that is what an internal auditor does, right? And internal auditors, they would be reporting to the management, right? They would be reporting to the management, right? When you are reporting to the management, can you see here in that particular management, Mr. Bookman is also involved. So can you see, since Mr. Bookman is also involved, they'll be getting scared. Oh my God, if I'm going to report it to the management, but he's the one who's committing the crime, and he's part of the management committee who I'm going to report. So will this be an issue for my job? Will this be an issue for my job? And okay, I'm planning on reading on again. Mr. Ebirama has reported his concerns to the internal auditor, right? Mr. Ebirama has reported his concerns to the internal auditor, who is a qualified member of ACCA, and he is a personal friend, right? Obviously, when y'all know, when y'all have any close relationships, this causes something known as familiarity. Obviously, right? When you are a personal friend, right, you all are having something known as a close relationship. So when you all have something known a close relationship with another party, it would tend to create something known as familiarity threat, right? Familiarity threat. So who faces this familiarity threat? The internal auditor faces the familiarity threat because he is a personal friend of Mr. Bookman, right? And he is not able to report it. Why? If he reports it, the relationship among them, the friendly relationship among them might be broken, right? So that is why I have included the second point, which is my familiarity threat, right? And a justification and an action point I have given, right? Since both director, since both the auditor and Mr. Bookman have a close relationship, So, yeah. Okay, because of this, what happens is, because of this, can you see here? The internal auditor is not able to apply professional skepticism, right? Professional skepticism. Hopefully, I'll know by now what's the meaning of professional skepticism, right? For the people who have done audit and assurance, for the people who have done SBL, right? You all would know the meaning of professional skepticism would be, okay. So professional skepticism means that uh, it's something known as questioning mind. Okay, y'all are always criticizing, or y'all are always arguing in a particular sense where it would benefit the company, right? Don't go to argue for everything, right? Don't go to argue for everything. You all only need to argue in certain areas which requires judgment, right? In certain areas which requires uh, more attention, right? So that is where you all need to apply professional skepticism. Okay. When you all are having a close relationship, right? Your independence, your professional skepticism and judgment is at risk, right? Let me add that point as well. Let me add that point as well. I totally forgot about something known as independence, right? Your independence is also being affected. Okay. Your independence will be affected, as well as your professional skepticism along with the judgment will be affected. Okay. Because of this, what happens is, because of this, what happens is, you all would not be able to perform a quality audit reporting, right? Because of this, you all will not be able to perform a quality audit reporting. Okay. You all will not be able to perform a quality audit reporting. Why? Right? Why? It's quite simple. This type of relationship will lead the internal auditor to avoid, right? He will avoid it, disclosing, right? Obviously, because of your close relationship, right? This would help you all, this would avoid you all disclosing, right, about the inefficient system. Okay. And because of that, you all would also avoid the disclosing about the negative impact, right? As an internal auditor, you all are supposed to identify inefficiencies in the internal controls and make sure that they are efficient. That is your duty. But part of your duty is that. But if you all, because of your close relationship or close friendship with that Mr. Bookman, who's a divisional head, you all would not do this, right? Because of this, you all will avoid disclosing. Okay. So the action plan is, obviously know that he is an ACCA member, right? And he must ensure that he carries his duty in an ethical manner, right? In an ethical manner, and report any findings to the respective parties, right? He can be your very own friend, right? He can be a close friend. He can be your brother, regardless of any relationship, any close relationship that you all have. If you all find any issues, right, that has been performed by that particular person, you all need to report it to the respective parties, right? Because that is what ACCA Code of Ethics says. Okay. So otherwise, you can simply resign. Okay, you can simply resign. But resignation is a last resort, right? It would not come as a very first option. It is one of the last resort that you all are supposed to implement. Okay, you are supposed to implement. Okay. And my final point is, I would speak something about professional competence and due care. Right? Is also another ethical issue. Professional competence and due care. Okay. Okay. So, what is the job role of an internal auditor? right? What is the job role of an internal auditor? The job role of the internal auditor is to identify any inefficiencies, right? He's supposed to identify any inefficiencies of the organization's control, right? That is what he's supposed to do. Okay, that is his competence, or that is his duty, right? Presently, they are aware of that there is an internal control deficiency, right? They are aware. Okay, they are aware that there is an internal controller deficiency. Okay, okay. But when they don't disclose it, when they don't disclose it, right? When they don't disclose, then what action plans will not be that. Right? Obviously, when you all don't disclose the problem to the senior management, right? Then there would not be any discussions. When there is no discussions, no alternative ideas or no alternative uh, action plans will be implemented, right? Because of that, again, your company will go through even more severe losses, and because of this poor purchasing system, which leads to poor decision making, right? So you all have to always ensure that you all are independent, right? Sorry, you all have to always ensure that you all are independent, right? Also, you all are always supposed to ensure that you all are independent, and if there is any issues that you all are facing, you all need to inform to the relevant parties, right? And this particular point, I just wrote it, right? This is not needed. This is not needed because our entire requirement, our entire answer is supposed to be revolving around accountant and the internal auditor, right? But I just spoke about something, the professional behavior and the objectivity compromisation because of Mr. Bookman, right? You all know the entire objectivity of the organization is to follow the centralized system, but Mr. Bookman did not follow, right? That is one that is leading to lack, that is compromising the organization objectivity, right? And how the professional behavior is affected by Mr. Bookman. See, when the entire organization is supposed to follow an authorization manner, right? A process of authorization, Mr. Bookman, just because he is holding a divisional head, which is a higher authority position, right? He is not following it, right? This shows that he lacks professional behavior because of his dominant position, right? This is what I wrote in terms of Mr. Bookman, which is irrelevant, okay? Which is irrelevant, right? Which is irrelevant at all. So if your answers include all these points, right? If your answers include all these points, you all will be able to get between 3 mark minimum to a maximum of 5 marks, right? Make sure that you all include action points, right? These action points are critical for you all to pass, right? Because that is part of your requirement, okay? A part of your requirement. This was not needed. This was not, Mr. Bookman was not needed. I just wrote it for the sake of writing, okay? So that in case that in your very next attempt, in your very next session, that if the examiner asks like this sort of question, you all might be able to grab in some points. Okay. So we're done with A and we're done with B and we're left off with C. Right? We're left off with C. Okay. C would be your very last requirement. Right? C would be your very last requirement. Here also they want you to explain. Right? Always ethics kind of questions is always regarding explanation or advising, right? Y'all are either supposed to explain or either y'all are supposed to advise. Okay. The possible effects. Okay, y'all need to only speak about the possible effects, right? Okay. Of IAS 38 intangible asset and IAS 36 impairment of assets, right? On the accounting treatment. Okay. Accounting treatment of the purchase of Cutherd Co and R&D in his financial statement. Okay, what do the examiner want you all to speak is, right? You all need to relate 4 marks, I guess, would be allocated for IAS 38, 4 marks would be allocated for IAS 36, right? So you all need to speak about the accounting treatment and its impact. right? It can be impact in your SOFP, it can be impact in your SOPL, cash flows, any of that sort. But make sure you relate or make sure that your answers revolve around IAS 36 and 38. Okay. So for that, I would be needing to read or no. For that, what I would suggest is, first of all, you all could simply speak about IAS 36 general definition and IAS 36 general definition, right? That you all could speak about, right? You all could speak. Here it is. IAS 38, right? IAS 38. You all don't need to show it separately. If you all want, you all can show it separately. It's not mandatory, right? It's not mandatory, right? According to IAS 38, what your definition needs to include is you all need to include these 3 points. Okay. Always an intangible asset does not have any physical substance, right? You all cannot touch it, right? You all simply cannot touch it. Okay. And it needs to be separately identifiable. Okay. How can you separately identify here? Yes, you all would have studied this. Okay. I'm just going through, I'm just recalling whatever the points that is needed, right? You all would have studied this in F7. Okay. It can be sold separately, or if you all purchase any contracts, if you all purchase any contracts, you all will be able to get rights. Okay. Okay, you all will be able to get rights. So identifiable means it can be sold separately to another person, right? It is not part of your organization. It can be so it is not part of your organization. You all can sell it separately, as well as it can arise through, right? It can arise through when you all purchase another contract or another organization, right? Subsidiaries. When you all purchase another organization or another investment, you all will be getting some rights, right? You all will be getting some rights to control. That also is known as identifiable. And last but not least, it should be a non-monetary asset, right? You all cannot easily convert into cash, right? Not easily converted to cash, right? These are non-monetary assets. Okay. And another one you all could speak about is, right? Another one you all could speak about is, wait, let me come to that particular point. Then after it, I'll explain why I need to show that as my general principle. Okay. Let me come there really first of all. Can you see here? We are left out with the very last paragraph, which is your procurement cost, right? They are required to upgrade their systems, right? For every 4 years. Okay. Normally, according to the company's policy, you all are needed to upgrade every 4 years your purchase system. Okay. The cost of upgrade would be 5 million. Okay. There are additional development costs incurred in Cutherd's division of 100,000, which is related to payroll. Okay. What happens is every 4 years, you all are supposed to upgrade your system, right? That upgrading cost would be 5 million. And also you all will be having an additional 100,000 in terms of your development, right? Now, let us see what these people have gone and done. Let us see what these people have gone and done. All of these costs, the total of 5.1 has been written off in the statement of PA and L. Okay. Okay. You all know, right? You all know when you all have a development expenditure, right? When you all have development expenditure, if that development expenditure meets something known as the pirate criteria, then you all can capitalize. Then you all can capitalize, right? You all can capitalize. If it does not meet only, if it does not meet only, you all can, expense it. But here, these people have gone and directly expensed a development expenditure, right? So now we need to argue. We need to argue regarding that. We need to argue regarding that. Okay. If it meets the private criteria, sorry, if it meets the pirate criteria, the development can be capitalized. If it does not meet, you can simply expense it, right? You can simply expense it. But always research would be expensing, right? You all will need to always expense the research, right? So this is a general point that you all could include. Okay. If it's research, you all need to expense. If it's development, you all will only be expensing it if it does not meet the pilot criteria. Okay. If it meets the pilot criteria, you all need to capitalize. If you all include these two general points, you all will be getting 2 marks, right? You all will be getting 2 marks. Then now I need to speak about the effect on my statement of financial statements, right? I need to speak the effect about my statement of financial position and SOPL. Okay. What I could speak is, first I would speak about the 5 million, and after I would speak about the 100,000 additional development cost. Okay. Here it is. Here it is. Can you see here? Can you see here? Let me change another color. Let me change another color to green. Okay. Can you see here? The new system is still not yet fully operational, right? It is not fully yet operational because of the incompatibilities. This is number one, right? You all are not able to use the system, right? This is number one problem, that it does not meet your pirate criteria. Okay. And the number two would be, it has technological obsolescence, right? It's not technologically feasible, right? Not technologically feasible, right? So what I try to conclude is, what I try to bring into you all is, right? These two, because of these two particular reasons, that it is not fully operational and it is having technological obsolescence, right? Because of these two particular points, I would say that this does not meet pirate criteria. Okay. And I would use this as proof, right? SBR is all about using proofs, right? So I would use this as proof. Okay. Let me show the answer scheme as well. Here see, because of here see, because of I'm not unable to use it, right? I'm not able to use it, right? My pirate criteria is not met. Okay. Number one, my pirate criteria is not met in terms of my 5 million, right? Also, this is not technologically feasible. Okay. Because it's not technologically feasible, it would not give me probable future economics. Okay. It's not going to give me. So therefore, since it's not meeting all these 3 points, the 5 million is not meeting all these 3 points, right? I would conclude, that I can simply expense off this 5 million. Simply expense the 5 million, right? Since it does not meet the higher criteria, right? This is what I have mentioned here. This is what I have mentioned here under 3 and 4 points, right? I have brought in proofs and I have justified those proofs. Okay, here it is. Since they are not still operational, okay, they will not meet the criteria of development. Okay, because they don't meet, right? We cannot treat them as intangible asset, right? Obviously, they did not meet the criteria of an intangible asset, IAS 38. So we do not show them as an intangible asset, rather expense to P&L, right? Obviously, you all need to show the accounting treatment. If it's not an intangible asset, what is the alternative situation? You all are supposed to expense it to P&L, right? Also, hopefully I'll remember, if it's an intangible asset, there is something known as an amortization. All right. Since this particular asset does not meet the pirate criteria, you all don't need to amortize, right? You all don't need to amortize. That also you all need to include in your answer. We will not need to amortize for 4 years, right? Why? Because amortization is only done when your asset is operational or when your asset is used for the business purpose. Here we can see that that particular asset cannot be used for the business purpose. Therefore, it does not meet your pirate criteria. That is why we do not consider them as an intangible asset. So therefore, we are recognizing that 5 million, entire 5 million as an expense, right? Another judgment, another proof would be, right? I need to speak about the technological feasibility, right? Since they are not technologically feasible, they are only used for short term, they will not be able to produce future economic benefits, right? Due to this, you cannot consider this as an intangible asset. And also, hopefully, I'll remember if I need to, if I need to show them as an intangible asset, right? I need to satisfy all these criterias, right? All these criteria, P, I, R, A, T, E. I need to satisfy all these criteria. If one, at least if one of these is not met, I cannot show it as an intangible asset, right? So in this particular point, in terms of 5 million, you all can see probable is not met, intention to use is not met, and your technologically feasible is not met. Therefore, this is not an intangible asset. This is rather you need to expense it, right? You all need to expense it. That is in terms of 5 million, right? That is in terms of 5 million. Okay. Now the 100,000. 100,000, what I would say is 100,000, what I would say is what I would say is this is an area of judgment, right? This is an area of judgment. Why I would say this is an area of judgment? If that particular area meets the pilot criteria, I can capitalize it. If it does not meet, I will simply expense it, right? I will simply expense it. But there is one particular point that I feel interesting is, yes, see, these are directly attributable costs, right? I have not mentioned in my answer, right? So I have, since these are directly, right? I have simply forgot to mention something known as directly attributable, okay? But I'm 100% sure this is an area of judgment, right? Both of these 5 million and 1 million is an area of judgment. Why? I need to use my pirate criteria. If it meets, it's an intangible asset. If it does not meet, it is a and simply expense, right? You all need to simply expense it off. These all in terms of, you all need to know in terms of IS 38, right? These all you all need to know in terms of IS 38. Right now we come to IS 36, right? You all need to speak about the definition. You all need to speak about IS 36 definition. What does IS 36 says, right? IS 36 says at each reporting date, okay, at each reporting date, when you're carrying value, when you're carrying value, when you're carrying value is greater than your market value or is greater than your fair value, okay, right? You all need to reduce it and you all need to bring it in terms of your current market value, okay? When your carrying value is greater than your fair value, the difference is known as impairment, right? This is all you all need to speak, right? Speak about the definition. And after that, do we always need to do impairment? No, right? Do we always need to do impairment? No. Impairment is only done at each financial year end, right? It is done at each financial year end, okay? If there is an indication of impairment, right? If there's an indication of impairment, for example, fire, right? Or damage or technological obsolescence, right? If you all have any of these indicators, right? Or if tsunami of any of that sort comes, you all need to do impairment. You all need to do impairment, right? If there is a fire, if there's a damage, if there's a technological obsolescence, right? In this particular question, obviously we saw that there's something known as short-term technological obsolescence, right? For example, you all can take Apple iPhone, right? What is the useful life period of an iPhone? iPhone can be always used from 1st September 2024 to next September 2025. Why? After that, iPhone 17 will come. Okay. So because of that, you all need to know do something known as impairment. Okay. Okay. So here see, I have spoken something about the impairment indicator, which is my obsolescence, technological obsolescence. Because of that, I need to recalculate something known as my recoverable amount. If you mention all of this, right, you will be able to get at least minimum of 6 marks to 7 is a sure shot, right? You all be able to get, right? This fourth point, I will leave it up to y'all, right? Fourth point, I will leave it up to y'all. You all can read it and you all can fill in the blanks, right? So what I would ask from y'all is, right? Try to do this. Try to do IAS 36, IAS 38, right? These IAS 36, IAS 38, IFRS 15, these are always tested by the examiner, right? Each and every question, I'm 100% sure that they will incorporate it somewhere, right? It is somewhere in your question, it will be incorporated. So make sure that you all have the relevant information stored in your brains, right? It's always easy, right? It's always easy if you all understand the questions, if you all have certain practice, and if you all know how to write the answer. Okay, that's it for the day. Hopefully that I would be able to meet you all in the very next class, right? In our very next session. This will be uploaded in your Google Classroom as well as YouTube. Okay, whenever you all are free, try to make sure that you all attempt this and do send your answers, right? And I will look into it. If that is so, let us meet in your very next class. Thanks a lot for joining.